Is China turning into an EV graveyard? With too many companies in the Chinese EV market and many of them filing bankruptcy, experts warn that there is a big crisis coming in China. Let's see. After years of rapid expansion, Chinese manufacturers of electric vehicles are now facing a downturn in domestic demand, which is forcing them to expand abroad and take on global auto giants who are already having difficulty making the switch to battery-powered vehicles. China surpassed both Europe and the United States in the sales of electric automobiles during a previous boom propelled by subsidies. The increase in sales spurred a wave of investment in domestic automakers, which are now the envy of the whole industry. The growth rate in China has lagged behind those two regions due to a slowdown in the market following the removal of subsidies and consumer spending cuts. The slowdown has sparked a furious price battle in China, entangling foreign firms like Tesla and dozens of other EV startups. A lot of Chinese EV manufacturers failed. Many Chinese EV makers burned through cash to chase a share of the growing market. Many are yet to turn a profit despite rising sales, leaving some at risk of going bust or needing injections of capital. 91 EV makers in China are simply not able to survive. That is an insane number. One of them has already gone bankrupt. They laid off over 1,000 employees a few weeks back. They were China's most luxurious EV brand. Nobody seemed to be having any problems, but all of a sudden, they stopped making cars. This is what's going to happen on a large scale. A decade or so ago, hundreds of automakers in China, both well-established companies and upstarts, entered the electric car production market thanks to government incentives. They produced large quantities of early-stage EVs. These were essentially basic vehicles with batteries that in certain cases could only last for about 62 miles between charges. Most of those cars were purchased by ride-hailing businesses, who then leased them to drivers. Car-sharing fleets drove delivery numbers at the beginning of China's EV market, stated Yang Huang, a senior analyst at JSC Automotive, a Shanghai and Stuttgart-based consultancy. Very few individual consumers opted to purchase them. Demand fueled a sector of the economy that has since expanded rapidly. With approximately 1 in every 3 new cars sold domestically, or over 6 million EVs and plug-in hybrids produced last year, China is currently the global leader in the production of clean vehicles. It has the most comprehensive EV charging infrastructure on Earth, which was also constructed with government assistance, and it is home to 60% of the world's current electric vehicles. However, a great number of people were also lost in that incredibly quick development. Many of the ride-hailing services that were among the first to use electric vehicles have shut down. There were about 500 Chinese electric car manufacturers in 2019, but there are currently only about 100. The graveyards are a troubling consequence of that consolidation. Not only are the sites an eyesore, but getting rid of EVs so quickly reduces their climate benefit, considering they're more emissions-intensive to build and only produce an advantage over combustion cars after a few years. Each of the vehicle's spent batteries also contain precious ingredients like nickel, lithium, and cobalt, metals that could be recycled to make China's EV industry more environmentally friendly. Many Chinese electric vehicle makers are facing bankruptcy due to market oversaturation, capital constraints, and intense competition. The proliferation of EV graveyards, a consequence of failed startups and abandoned vehicles, reflects the challenges within the industry. Despite government investments and incentives, most companies struggle to achieve sustainable sales volumes. The recent wave of bankruptcies underscores the market's inability to support numerous players, with even prominent names facing financial difficulties. The domestic market's limitations, characterized by a preference for small and cheap EVs, further exacerbate the situation. Only a handful of companies, such as BYD and Tesla, have managed to turn a profit, while others seek international expansion to offset losses. Before Tesla Inc. came to China and began making cars from its factory in Shanghai in early 2020, most EVs being produced in the world's second biggest economy were small and low quality. They were hardly appealing to consumers faced with a plethora of good-looking combustion engine cars. To kickstart EV adoption, the government in the late 2000s began offering rebates of as much as $8,400 per vehicle, and restricting the ownership of gasoline cars in several major cities. Automakers backed or founded several ride-hailing startups, which in turn filled their fleets with their electric offerings. Geely got behind Cao Chukching, for example, which is still operating. But another car-sharing service called Panda, backed by Chongqing Lifan Auto Company, folded, and Lifan Auto itself filed for bankruptcy in 2020. It was acquired by Geely a year later. A brand of EVs called Maple, made by a joint venture between Geely and Lifan, was spotted at one of the sites Bloomberg News visited. In the mid-2010s, China ramped up its push for EV adoption with a credit system that rewarded automakers for producing EVs and penalized the manufacturing of high fuel consumption cars. A 2021 Fitch Ratings Inc. report raised the possibility that some companies started ride-hailing companies as an easy way to absorb their growing inventories of EVs that weren't being bought by the public. Some companies also began cheating the subsidy program by falsifying records for non-existent EVs. For example, they could produce an empty chassis that didn't contain a battery, or make cars with batteries that didn't meet the correct specifications. The official People's Daily in 2016 cited estimates that dozens of companies had fraudulently claimed more than $1.3 billion in subsidies. Beijing began slashing national subsidies for all electric car purchases in 2019. Many ride-hailing companies were unprepared for the policy change, which severely affected their cash flow. Those players couldn't survive, Huang said. Let's discuss Li Auto. They are outperforming the majority of EV companies in China and are performing fairly well there. Actually, based on their output over the last 12 months in China, they're most likely in the top 3%. The government must intervene, according to their CEO, because some of these automakers are unable to absorb these types of losses. It is necessary to compel them to actually join together. China may experience a financial tsunami as a result of these bankruptcies. We've already experienced this. The situation with Evergrande. More than $500 billion was lost when Evergrande went bankrupt. Many real estate developers are declaring bankruptcy these days. It seems that within the previous 12 months, almost 2,000 auto dealers were permanently shut down. And then there are the automakers going bankrupt, like Jeep. Automobile manufacturers such as Mitsubishi have essentially declared bankruptcy in China. And China is an extremely dangerous location to conduct business at the moment. We wouldn't want to be a legacy automaker there, and no one wants to compete there either. Unless you're a BYD or CTAL, we definitely wouldn't want to be a Chinese automaker there either. In any case, the CEO of XPeng, a Chinese producer of electric vehicles, informed staff that within the next 3 years, 30 new and updated EV models will be unveiled, 10 of which will happen annually. That's ridiculous for a small automobile company. Although XPeng was created in 2014, they have never turned a profit in a single quarter. How that's possible is beyond us. We're not sure how businesses such as these continue to exist. However, one way might be the Volkswagen Automotive Group's acquisition of 5% of the business, which was a billion-dollar agreement. That may have been a significant injection of cash for them. How long will that cash injection going to last? According to an email issued by Zhang's CEO to employees, there will be a sea of blood over the next 12 months because the fierce competition in China is simply too much. Both the number of automobile manufacturers and models are way too many. Sales are there, and the Chinese EV market is indeed booming. However, there are still far too many automakers, and the old automakers are just marking down their vehicles to the point of desperation. For example, numerous EVs have been offered at 50% off by Audi, BMW, and Mercedes. Gift percentage discount. Can you believe this? You may not hear these things, obviously, because it's China. The brand WM was closed due to bankruptcy. WM was founded in 2015 by Freeman Shen Hui, the former CEO of Zhejiang Geely Holding Group. Since the second half of 2022, the company has struggled financially, and it was dealt a setback in early September when its $2 billion reverse merger agreement with Apollo Smart Mobility, a Hong Kong-listed company, fell through. In China's booming EV market, where up to 200 licensed car makers are fighting for market share, including the assemblers of gas guzzlers who are finding it difficult to switch to EVs, WM is not the lone underachiever. In the automotive industry, where 60% of newly manufactured cars will be electric by 2030, the manufacturers who can afford to provide the most extravagant and regularly updated models are the ones who are likely to make it. As larger players gained market share, at least 15 once promising EV startups with a combined yearly production capacity of 10 million units either collapsed or were driven to the brink of bankruptcy, leaving smaller competitors like WM to fight for scraps. This trickle of exits is threatening to turn into a flood. China Business News made these calculations. That's all for now. Thanks for watching. If you enjoyed this video and found it entertaining, then don't forget to hit that like button below. And if you want to stay updated with more great content like this, make sure to subscribe to our channel by clicking the red button and just ringing the notification bell so you never miss any future content from us. Your support means the world to us.